So, you see the headlines, global tensions are running high, and your first thought is, what does this mean for my money? Well, that's exactly what we're going to break down today. How to handle your finances when the world feels a little crazy.
All right, here's the plan. We'll kick things off with what's happening right now. You know, the war, worry, and your wallet stuff. Then we'll take a look back at history. After that, I've got 5 smart moves for you, a little something specific for our US and Canadian viewers, and we'll wrap it all up with the long-term investor's mindset.
So, let's just get this out of the way first. It's totally normal to feel a bit of anxiety about your finances when you turn on the news. I mean, how could you not?
Yeah, that question on the screen, it's not some what-if scenario. This is happening right now. We are seeing the ripple effects on the global economy, and it's hitting us where it counts, in our day-to-day lives.
Okay, let's look at the hard numbers since this whole thing kicked off. Oil prices, they've shot up over $110 a barrel. Stocks in both the US and Canada have been, well, all over the place. And look, this isn't just abstract market talk. This means you're paying more at the gas pump, more at the grocery store, and the whole economy is kind of tapping the brakes.
So yeah, that's the initial shock. It feels pretty intense, right? Almost like nothing we've seen before. But, and this is a big but, this is where taking a deep breath and looking at the past really helps, because history tells a very different and honestly a much more reassuring story. Just look at this. It really shows how resilient the market is. After Pearl Harbor, a massive shock, the market was back on its feet in a month. After 9/11, recovery took just about 2 weeks. And more recently, with the war in Ukraine, the S&P 500 was actually trading higher just a month later. You see the pattern here, right? The initial panic is sharp, but the bounce back often is too.
And that brings us to this classic quote from Warren Buffett. It's all about mindset. The best investors in the world, they don't see chaos. They see a shift in psychology. When everyone else is freaking out and selling, that's when things go on sale. It's about flipping that switch in your brain from, oh no, I need to protect myself, to, is there an opportunity here?
All right, so history is one thing, but what do we actually do with that information? How do we turn that lesson into a real strategy? Well, let's build out your playbook, a real actionable guide.
I'm going to walk you through 5 simple, straightforward steps. This isn't just about playing defense, it's about setting yourself up for growth down the road.
Number 1, diversify. You've heard it a million times. Don't put all your eggs in one basket. And there's a reason it's a classic. By spreading your money across different things, like stocks, bonds, maybe some real estate or commodities, you're building a buffer. If one area gets hammered, the others can help soften the impact.
Step 2 is to think about what we call safe havens. It's like insurance for your portfolio. When things get shaky, people tend to rush into assets that feel safer. Think gold or US government bonds. They have a track record of holding steady or even going up when the stock market is going down. A little bit of this can add a whole lot of stability.
Ah yes, buy low, sell high. It's the simplest advice and the hardest to follow. But it's the heart of step 3. Look, when the market pulls back, it feels scary. But that's not the time to sell. It's actually the time to consider buying. You're getting things at a discount. And you don't need to be a hero and perfectly time the absolute bottom. Just adding a little bit when prices are lower can make a huge difference.
Fourth, and this is really important, not every part of the market goes down in a crisis. Think about what's happening right now. With everything going on, it makes sense that sectors like energy and defense might actually do well. This isn't about being cynical, it's about being strategic and understanding the economic forces at play.
And last, but honestly, this should probably be first. Manage your cash. This is the foundation of everything. Before you do anything else, make sure you have an emergency fund. We're talking 3 to 6 months of living expenses sitting somewhere safe and easy to get to. This is what keeps you from having to sell your investments at the absolute worst moment.
All right, so that's the 5-step playbook. Now let's just touch on a couple of things that are specific to investors in the US and Canada.
So even though the US and Canadian economies are really closely linked, their stock markets are built a bit differently. The US market is huge and diverse, with that long history of bouncing back from shocks. But in Canada, the main stock index, the TSX, is heavily weighted towards the energy sector. That means when oil prices are high, the Canadian market can actually react very differently, sometimes even doing well when other markets are down. It's just a key difference to keep in mind.
Okay, so we've talked about history, we've talked about strategy, and it all really comes together to point to one single incredibly important lesson. If you take anything away from this, this should be it.
And here it is. It's not about timing the market, it's about time in the market. Forget trying to be a genius who can predict the exact bottom or the exact top. Nobody, And I mean nobody can do that consistently. The real secret to building wealth is just staying invested through the ups and the downs and letting the magic of compounding do its thing.
This little table tells an amazing story. You've got 3 investors. Tiffany has the worst timing ever. She only invests right at the market peaks. And guess what? She still ends up with over $2 million. Then there's Brittany, who has perfect timing, like a psychic. She does great. But then look at Sarah. Sarah's strategy? She just invests the same amount every single month, no matter what. And she beats them both. Why? Because she was just consistent. Her money was always working for her.
And here's the flip side of that coin, the danger of giving into fear. If you panic and pull your money out, you risk making a massive mistake. Because the market's very best days, the big rebound days, often happen right after the very worst days. And get this, if you missed just the 10 best days in the market over the last 20 years, your returns would have been cut in half. That is the incredible cost of panic.
So at the end of the day, it really comes down to this. Stay diversified and think long-term. That's it. It's not a sprint, it's a marathon. You win by keeping your eyes on that finish line way down the road, not by getting scared of every storm you have to run through to get there.
The headlines are always going to be scary. There will always be something to worry about. But by focusing on what you can control, your strategy, your discipline, your mindset, you can ride out any storm. The one thing you have total power over is how you react. And honestly, that makes all the difference.